years if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles. How did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, hello, good morning, good afternoon to everybody. Welcome to another episode of Building Blockchains. I am your host, Jeremy Whaley, and it is great to be joining you today on this Wednesday afternoon where I'm at.
And we got some great stuff to talk about today. It's another bearish day in the market itself, but that doesn't necessarily mean all things are bad. So we got some great stuff ahead. Here's what our agenda is going to look like today. We'll do a little market update as always. We're going to talk about El Salvador today, who's been loading up on some Bitcoin, taking advantage of this dip. And then we're going to look a little bit at what the SEC is doing. That's an interesting story. Then I'm going to share with you 3 ways that blockchain is completely changing the world. And I think if you are open-minded about it, you start to see that this whole idea of blockchain, this whole idea of crypto, it really is actually almost not about currency at all, despite what the name suggests. But you'll discover that we've got all these incredible use cases, and this is what's really driving this revolution. And then finally, I'm going to talk a little bit about how we trade at pivot points, and that's so relevant today because we're actually at a pivot point in the market. This is exactly where we are. It's exactly what's going on right now, and we're going to be talking about it. So with no further ado, let's take a look at the market, get some updates, and see what we can piece together about this crazy world we call crypto. And if you've been paying attention this morning, it's another sea of red. Feels like that's all we say lately. But trust me, if you've not been around crypto very long, you'll realize that sometimes we go through seasons of red. And then it turns around and we have seasons of green. And it's fun. And it's a roller coaster sometimes. But that's where we are today. Take a look at it. Bitcoin down another 4%, 3,712, 3,707. It's fluctuating, obviously. Ethereum's down 7%. It's kind of a big one there. Solana's down over 6%, 7% on Cardano, 7% on XLM, and on XRP. So, yeah, all things considered, it's a pretty red day. And no, I don't like trading days like this. But it's not the end of the world. Let's take a look over here at Bitcoin, and I'll tell you what I'm thinking. I want to zoom out first. Let's zoom out a little bit. And if you can see the chart, you can see the trends, you're going to notice that, yeah, we're actually starting to really get below this trend line right here. Getting below our support levels. As I zoom in just a moment, you'll see how big and red that candlestick is. That means we need to look to the left. And what you're going to find if you know what you're doing, if you don't know what you're doing, you're going to find all sorts of stuff. But if you know what you're doing, you're going to find that there is a little bit of support potential right there, but really the best support comes in actually mid-70s. Yeah, I hate to say that, but if this thing doesn't find support very quickly where we are, we're probably looking at some support down around 75,000. So hang on to your hat. We could be going down another 14,000 or so on Bitcoin, which will freak a lot of people out, and it will also be a great buying opportunity. If you look at where my cursor is on the screen there, you'll notice that there's actually support right where my cursor is from back in April of this year. And then there is support. There's a resistance of pretty much all of last year, right around the 75,000 mark. So it is a known structural point in terms of where the chart's at. It makes perfect sense. Is it the way I wanted it to play out? Not necessarily, but it's also not necessarily bad. And that's one of the things you're going to learn about me. I tend to not get too upset about where things are, mostly because I position myself based on where we are in the trend, not based on what I want to happen. And so right now we've been in a bearish trend and I haven't had a lot of exposure. And so I'm not too worried about it. Once we make the turn and we're back into a bullish trend, obviously, that's when we start taking on more exposure. And then I'm a little bit more biased in a bullish direction. But, once it turns again, we get out, we take our profits. So all I'm doing is reporting. That's why I'm relatively emotionless about it, because all I'm doing is reporting on what I see happening and reacting to and playing the market. And the more you can do that, the more dissociated you can be from the price action, the healthier relationship you're going to have. Now take a look here. I'm going to actually zoom in a little bit more. I think I am. I can't seem to get that thing off. There we go. I'm going to zoom in a little bit more here. And you're going to notice that, yeah, that's a really big old bearish candlestick today. It's 4%. I mean, that's a big move for really anything, but for Bitcoin, it's a big move. The fact that some of these other cryptos are down 7 and 8% is an even bigger deal because there's just a lot of money that's flowing out. Again, it's not necessarily a bad thing. There's a lot of profit taking. We're coming into a Christmas season. So, some people are closing out positions saying, I'm just going to take the money that's there, position myself for a good Black Friday sale next week. And I think that's a lot of what you're seeing happening right now. Volume is decently high. It was higher yesterday. Yesterday when we were trying to find some support in there, it's kind of a bigger deal because it was a little bit better volume, but still some decent volume happening today, at least based on where we are right now. You can kind of see the volume bars down here at the bottom. I don't make a big deal about those, so I don't have them super, super bright. Just kind of clutters my chart up. Anyway, that's where we are with Bitcoin. Let's take a look over here at Ethereum. If you're looking at Ethereum, well, you know, the good news about Ethereum, even though it's a big old 7% candlestick right here, we are right at a known support level. And I think that's a good story. So let's see where we go tomorrow. Let's see where we go throughout the rest of the week and over the weekend. I wouldn't be surprised to start seeing Ethereum really pick up some support here. I know I said that last week too, but you know, I'll say this every week. When you're coming into support, that's the place you want to see it happening. That's where you expect to see it showing up. And if it doesn't show up, then you're like, okay, well, it didn't show up. But that doesn't change the fact that that's where we're expecting to see it. So let's take a look at our stochastics. You're going to notice we're really quite oversold here. Again, not really a shock. Apparently, I have a bunch of indicators that decided to show up here. Wonder why they were hit. They were in hiding. They were in witness protection. There we go. So yeah, it's oversold. It's about what we would expect to see here. And as soon as it makes this turn, there's going to be a great buying opportunity. So we're just not quite there yet. XRP, this is kind of a big story. I've been saying to my Sunday night profit picks class, be ready. I think you're going to get a chance to buy XRP sub $2. I was starting to question that, and now I'm no longer questioning it. We're down to $2.03. Now, those of you who bought up here at the top, I love you. Nothing wrong with you. I'm sorry. You just didn't know where you were in the trend cycles. But we're back to a really, really, really good foundation point. All you have to do is look back to the spring. That was a major support level right there, right around the $2 mark. And I think that this will be support. If this drops as support and it doesn't hold as support, we probably have some bigger problems happening with XRP. But all you have to do is look back at history, and you're going to see that, wow, going all the way back to December of last year, this has been the primary support level right here at $2, just slightly above $2. So this area will be the support zone I fully expect. If I were to go further back on XRP, we have to go way, way back here, but you discover that that was kind of the resistance level too. I scooted this up because we had so much more support at the $2 range, but originally that line was from the April 21st peak. Okay, but that is a major, major long-term pivot point on XRP, and you should be getting ready. If you're looking at XRP, you're wanting to buy some, get ready. We're about to get the signals on that. XLM is the same story. I said 24 cents 3 days ago. I said I was going to start buying 24 cents. It hit 24 cents and bounced. I started buying. I got some at 25 cents. And you know what? I jumped the gun because they were down into the 23-cent range today. There is a major support level right there from April and June of this year. That is the primary support. That's the big one. And you know, if we drop below that, I actually would be happy because I would love to get some more XLM sub 10 cents. That's our next major support level is 10 cents, 9 cents. I did load up on XLM when we were back in the 8 and 9 cent range last fall. If I got a chance to do that again, I'd probably be pretty darn happy. So yeah, that's where we are on XLM. I want to be clear when I talk about loading up, when I talk about taking new positions, I take positions, but then I sell them. Okay, so I'm not sitting here saying, oh, I'm loading up because I'm just buying the dip and I'm just storing my bag. That is not my philosophy. If you hang around me long enough, you'll realize I don't trade like that. I buy whenever it's a good deal to buy, and I sell whenever we're high. And that is the way that I've always treated crypto. I've never lost money on crypto except for a couple of meme coins that I was just playing with and probably shouldn't have been playing with. But I've never lost money on crypto. Can't say that about stocks, can't say that about options, but I can say that about crypto. And it's just the fact. But you got to know how to do it. I mean, you can't just randomly throw money at it. Take a look at Solana here, starting to drop below that pivot point. Will we get back down to the 106 range? I kind of hope not, but at the same time, I kind of hope so, because once again, I need to pick some more up, and that would be a really great price to pick it up at. But I believe a lot in this project. I really was a strong believer that we would be seeing new all-time highs before the end of the year for Solana. I'm going to have to adjust that forecast. I don't see that happening at this point. We're in a pretty well-established bear trend right now, and you know, we're just looking for support. Support's got to show up here, but I don't think in the next 5 or 6 weeks we're going to be pushing into new higher highs. It'd be 100% gain. It's probably not going to happen. Let's just be honest. All right. So that's where we are as market update for crypto on this November 19th, Wednesday, 2025. 1 week from today. What are you going to be doing? 1 week from today, you're going to be getting ready for Thanksgiving if you haven't done so already, and it's going to be great. Exactly 1 week from today, you're gonna be grateful for something. I don't know what you're gonna be grateful for. Hopefully you'll be grateful for me. But you'll be getting ready for Turkey Day, smoking your turkeys, baking your turkeys, maybe frying your turkeys. Always love some fried turkey. That's a week from today. Of course, a week from tomorrow is Thanksgiving itself, and we will not do a live stream on Thanksgiving Day. But I will plan to do one every other day next week. So Monday through Wednesday and on Friday. All right, let's take a look at some of the news headlines and what's going on on this front. Well, the news headlines are actually starting to shift just a little bit. Take a look at CoinDesk, crypto markets today. Altcoins are showing signs of life as Bitcoin holds key support above 88,000. Did they look at the market? Do you ever look at the headlines and wonder, did they even look at the same chart that I'm looking at? I mean, altcoins are down 8% in some cases or more. And CoinDesk is saying, hey, it's showing signs of life. Like, what chart are you looking at? And this just came out a few hours ago. I mean, it's just like, I don't know. I just had to share it with you. I just had to share it because I have to make fun of the news headlines all the time. This one's not something to make fun of, though. This is actually very serious. El Salvador buying the dip, accumulating almost 10,098 Bitcoin in 7 days. Let's go, El Salvador. Now, if you don't know, El Salvador is one of the first nations to officially declare that they're going to start storing their national treasury in Bitcoin. And they've already got one of the largest holdings of Bitcoin. And it's not just because they want that for national security and national economic reasons, but it's actually becoming a primary currency in El Salvador. Now, I think over time, probably in the relatively near future, Bitcoin will be less in demand, I would say, in El Salvador as an alternative currency. But we actually have some friends that are down in that area. We have some friends in El Salvador, and we have some other friends that are up in, I want to say Chile, but I could have the country wrong. But anyway, they're over there in South America. And what both of them have reported is when they go to like the farmer's market and they just go out to buy fruits and veggies, they would actually prefer in those areas to transact in cryptocurrency. And this is something that people in the United States and Canada and, I'll just call them first world countries don't really understand. We have so much technology. We have so much opportunity to be on the cutting edge of everything. But when you look at a place like El Salvador and you look at a local market in El Salvador or in Chile or in, so many of these countries, all across Africa, I mean, just all these different countries around the world, dealing with cash is really dangerous because what happens, they get robbed a lot, they get mugged a lot. And so dealing with cash is not a preferred way to do business in these areas. And then you flip it and you say, well, just swipe a credit card. Well, here's the problem. Their credit card transaction fees are 10 and 15%. So on top of everything that they're already having to pay, 10 to 15% of every dollar or whatever their currency is that comes in is going to pay Visa and MasterCard for their stinking transaction fees. So what crypto is doing is it's giving them a way to take digital payment that goes directly to their bank accounts or directly to their crypto wallets, and they can do it with relatively low fees. I mean, just even if you're paying Ethereum gas fees, it's a fraction of what a credit card transaction fee would be. But if you're using something that's a little bit more efficient, like a Solana or an XRP or XLM, then you have almost no cost associated with that. And it's really, really efficient. And that's how people are doing it down in these areas. So it's natural to see these nations like El Salvador saying we're going to adopt cryptocurrency and specifically Bitcoin as the standard. Now, I want to bridge that concept and I want to go back to what we talked about yesterday. Yesterday, I talked about how I think that Bitcoin is more valuable than gold. And some people pushed back on that and said that was crazy. And Thank you. Appreciate your opinion on that. But this is actually building the use case and the argument for that. What El Salvador is saying, they're not saying that we have to transact in Bitcoin. What they're saying is Bitcoin is more stable than our currency, and it's more stable than gold. It's a better place to hold national reserves. That's what they're saying. And so I really love this story. I've been following it for a long time, and I thought it was really interesting that just today, starting to report that they are buying up more and they're continuing to build their national treasury in Bitcoin. So that's a pretty good story happening there. I got another great story happening today, and this is with the SEC, the Securities and Exchange Commission, those evil people up in Washington. Okay, I don't want to say they're evil. They might come after me. So those wonderful angelic people that make sure we stay safe in our financial markets up in DC. SEC, the Securities and Exchange Commission, is done with crypto. Removes all mention from its agenda. Wow. For 2026. That's an interesting story. SEC's 2026 priorities drop all references to crypto, signaling a deliberate shift towards broader tech and compliance risks. Why is that a big story? If you read the rest of the story and the rest of the article, it will go on to say exactly what the headline said. It's nowhere in their agenda. It's nowhere in their agenda. Why is that a big deal? Because for the last couple of years, specifically 2024 and 2025, crypto was in the crosshairs. And when Gary Gensler was the head of the SEC, it was more than the crosshairs. Crypto had the X marked the spot, and they were trying to drop some nuclear explosions or something on the world of crypto. Thank God Gary Gensler is gone. He destroys everything he touches. And I'll give you a little history on that if you don't know the story. Way back when, 2007, 2008, 2009, Gary Gensler was at the CFTC. That's the Commodity Futures Trading Commission. And the CFTC, they oversee things like futures and Forex and a lot of options trading and that stuff. Whereas the SEC deals more with equities. Well, when Gary Gensler was at the CFTC, Congress decided that, oh, you know what? Forex is starting to really get big in the United States. We should regulate it. We should put it under the CFTC. Gary Gensler didn't like that. And he said, you know what? I'm going to make it so difficult that nobody wants to trade Forex in the United States. And guess what he did? He made it so difficult that nobody wanted to trade Forex in the United States. They imposed all sorts of regulations. They made it so you can't do things in the United States with Forex that you can do everywhere else on the planet, literally just in the United States. And they did it under this auspice of, no, it's for national security because we're trying to stop money laundering. Where have you heard that before? Like, it's the same argument they make with crypto, right? And then they went further and back around the Dodd-Frank time, if you remember that bill, Dodd-Frank, they imposed leverage rules. Up until then, we could trade 100-to-1 leverage. Post the Gensler ambush, it got it down to where it was like 25-to-1, and on some altcoins it was like really, really low, like 10-to-1, 5-to-1, depending on how alternative the coins were. They didn't call them altcoins; they call them non-majors. Anyway, Forex pairs, not coins. Anyway, they made it really difficult. And so then everybody's like, oh, well, I'll just go over to the other side of the world and I'll trade my Forex. And that's what I did. I was trading Forex in Australia, and it was great. Had all the none of the regulations, all the freedom we wanted, until Gary Gensler was like, no, we can't do that. We can't do that. And they passed a law in the United States that I still don't know how it's enforceable, but they said if you open, talking to other Forex dealers around the world, if you open a Forex trading account for somebody in the United States, you are coming under U.S. jurisdiction by your own admittance. You're dealing with our people, and we're going to come after you, and you have to put yourself under all of our law. Now, I don't know how that's enforceable because I don't think that Gary Gensler had the power to do that, but they did it. And all these dealers overnight started sending our money back. They're like, no, we're not playing with Americans. That's why if you're in America and you try to open a Forex account, you can't do it overseas. Not the way the rules are written right now. And it was that guy, that evil man, Gary Gensler, who almost completely crushed Forex in the United States. And then they took him to the SEC, and guess what? He was coming after crypto. And thank God we got rid of him. I mean, seriously. So I think this is a huge story. I think it's a huge story. Of course, he's been gone for a little while, but this is a really, really big story. It looks like, the XRP lawsuit, getting that thing all cleaned up and finished off. We got Gensler out of there. I think they might just leave us alone. And that's the best thing that could possibly happen. Just freaking leave us alone. And I think you at least got a year because it's not on the agenda for 2026. So maybe the next 3 years at least, because we got the current president in office who is very pro-crypto. So I think we've got a little bit of a breathing room here to maybe get some stuff done in the world of crypto without worrying about the regulators. Anyway, that's some pretty good news, I think, in the space of crypto today. So celebrate. Something to be thankful for moving into Thanksgiving week. Let's take a look at some crypto basics. And today I got a really good set of topics to talk about. So let's get there. All right, 3 ways blockchain is changing the world. I've been laying out the argument after the last week or so that crypto is not just currency. If you think of crypto as currency only, you're shortchanging yourself, pardon the pun. You are not understanding the value of blockchain. You're not understanding the value of crypto. So today I thought it would be nice to take a little trip and look at some of the other projects that crypto is enabling and show you that it's really not about currency. That's why we can have hundreds of cryptos. That's why we can have thousands in the future, because it's not about the currency. And yet it's also not an unregistered stock issue, which is what the SEC was trying to claim. They were trying to say, when you issue a cryptocurrency, that's just ownership in a company. And, XRP, we're going to come after you because you just sold people your XRP coins. And, that was an unregistered stock issue. No, it really wasn't. And maybe you're going to understand that better as we get into this segment today. So I want you to understand the real value of crypto comes down to 2 things. Number 1, what is the use case? Well, I guess it's more than 2 things, but this is the primary things it comes down to. Use case and answering the question, what can it do and how does it help the real world? Because in answering these questions, what's the use case? What can it do? How does it help the real world? In answering these questions, we answered the real most important thing. Why would somebody want it? And when we answer the question of why would somebody want it, we answer the demand question. Why is it that somebody would want Bitcoin? Why would somebody want Ethereum? Why would somebody want Solana? That is the demand question. And the only way to answer the demand question in crypto is to answer the use case question. If you've been trying to analyze your crypto and you're looking at all the tokenomics and you're looking at the supply side and, what's the max supply? What's the circulating supply? What's the market cap? If you're looking at that, great. You feel special, but it does nothing to answer the most important questions. Why would somebody want to buy this crypto? What is the demand? Everything comes down to supply and demand. Why would somebody want to buy it? And to answer that question, we have to understand the use case. Now, I've been making the use case argument for the last couple of weeks that crypto is not currency. It can be used as currency, but it's not currency alone. So we could say that a little bit differently. All crypto could be used as currency, but not all crypto is currency. How's that? Right? So the name cryptocurrency actually is misleading because it leads people to think it's always about money, and it's not. It's about the use case. So let me introduce you to 3 use cases that I think are changing the world and will forever change the landscape of how we do investments, how we do ownership, how we do security, and you can just kind of keep on going down the list. And ultimately, I think what I'm going to present to you today lays the foundation for the argument of why we don't even need the SEC anymore. I said in the news headlines, hey, the SEC is not interested in crypto anymore. Well, I'm going to make an argument, not a strong one today, but I will make a little bit of one today. We don't need the SEC anymore. We don't need the regulators anymore. We don't need the CFTC. We may not even need the central exchanges anymore. I kind of think we don't. We have the technology to do everything that they did or do, and we can oversee all of that with a basically flawless blockchain without human interaction and without human, corruption. That sounds like a great word, right? Yeah. So use case number 1, tokenized real-world assets. Have you ever heard this term before? Tokenized real-world assets. What does that mean? I remember when I first heard this, I was like, I don't get it. Like, it's just weird vocabulary. And the people that were trying to explain it to me were so excited about it. And I was like, I don't get it. I don't get it. And then I finally got it. I'm hoping I can give it to you right now. Imagine owning one of these pieces of property. I'm like, wow, those are some expensive hotels. Have you ever been to any of those? I've been to the one on the right. It's so amazing. Anyway, I digress. Imagine, owning one of these hotels. You'd be like, I can't. Like, legit, I can't. I'm not sitting on a few $1 billion. It would be nice if I were. But even if I were sitting on a few $1 billion, I probably wouldn't buy that hotel because I'd want to diversify. So I would need to be sitting on a few tens of billions if I was going to buy one of these hotels, right? But imagine owning not all of it, just a piece of it. You say, well, how much could I own? That's a great question. Imagine that we divided the ownership up among tokens. You don't own Bitcoin. If you own some Bitcoin right now, you don't own all of Bitcoin. You just own a little bit of it, right? It's a multi-trillion dollar, what is it, I need to look at the market cap today, but $2 trillion market cap. If you wanted to buy all the Bitcoin in the world, it would take you a couple $1 trillion if you get people to sell it to you, right? You don't have that much money, but you can own a little bit of it. And the same is true with these hotels and these real estate pieces of real estate property if we were to tokenize them. So here's the use case. The use case is to say, what if we were to break real assets into digital tokens? Take real assets such as a hotel, such as raw land, such as businesses, fill in the blank. Take a real asset, and instead of having to sell the full contract, having to be the sole owner of the property, instead of investing in REITs, a real estate investment trust, and instead of having all this paperwork, what if it was as simple as, here, this is the asset, we've divided into 1 million digital tokens, here's the price. And anybody could buy the tokens. What if we were to tokenize these real assets? Each token would then be recorded on the blockchain. It would lower the barrier to entry. We would have 24/7 liquidity. Just imagine you've got a house. I would assume most of you live in a house or an apartment or something right now, but let's assume you have a house and you want to liquidate it. What do you have to do? You have to go to a real estate agent, and the real estate agent is going to go list it. And the real estate agent is going to list it, and they're going to do showings and all this stuff. What if you just want to liquidate part of it? What if you just wanted to sell off partial ownership in the form of, maybe some digital tokens? And you could say, well, you know what? I'm going to sell off 20% of my house to raise some cash. And then what if you could go back and you could buy it back? And what if all this could happen 24/7 in a marketplace, a digital marketplace where you didn't even have to have closing agents and lawyers and real estate agents involved? 24/7 liquidity. Automated records of the ownership. You don't have to go through all the filing of the paperwork and taking the deed down to the county courthouse and all that stuff. What if it could just be as simple as buying and trading Bitcoin? The answer is it could be, and it already is. It already is. In fact, some of the largest investment houses in the world right now are already adopting this philosophy. You can already start to buy real assets as crypto tokens. So when you're buying them, not only are you taking ownership of them, but you're doing it in a blockchain environment. We can do it with stocks. We can do it with real estate. We can do it with businesses. We can do it with treasuries, U.S. treasuries. Maybe you don't want to buy a whole bond. You just want to buy part of it. You can do that with tokenization. You can do it with commodities. You can literally do it with anything of value. Now think about that. This comes back down to what are our basic rights in America? What are our basic property rights, right? In the United States, property rights has been one of the most foundational principles of society. How do we transfer property rights? How do we guarantee property rights? Yada, yada. That's what our Constitution was built for. It's been cumbersome. Let's be honest. It's been really cumbersome to go through all of the legalities of transferring and securing property rights. The blockchain makes it simple. The blockchain makes it really, really simple. What if that crypto block, what if that cryptocurrency represented property? What if it represented a basket of properties? What if it was a complete portfolio of commercial real estate that produces on a monthly income, and it gets monthly income coming in just like almost all commercial real estate property does? And you say, well, I don't have the millions of dollars necessary to buy that. What if you could just buy a Satoshi worth? What if you could just buy a fraction of it? You say, I want to own part of NVIDIA. I want to own part of Netflix. I want to own part of some of these expensive stocks, and I can't afford them. What if you could buy just a fraction of them? And the answer is you can with crypto. What tokenized assets does is it takes this concept of real world assets and it divides it up, puts it on a blockchain, and divides it up among tokens. They can be traded as simply and as easily as you can trade Bitcoin or Solana or any other crypto. Wow. I mean, if that's not a use case, what is? I think that's a pretty good use case, right? Let's look at another use case here. How about the banking industry? You may have heard me refer to DeFi. DeFi is short for Decentralized Finance. I remember the first time I heard this, I was like, what? Like, I could not wrap my mind around it. Now I can't stop thinking about it. Now this is the most exciting thing in the world to me is decentralized finance. But DeFi is going to replace the traditional banking system. I've been saying it now for 4 years. I'm doubling down on it. I'm quadrupling down. I would literally go all in on that statement. DeFi is going to replace the entire banking system as we know it. I think central banks are going to go away. I don't think we need them anymore. We no longer need the infrastructure of the centralized banking system. We no longer need the infrastructure that government, pretended to be protecting us with. It became very corrupt with humans, and the blockchain is our way out. The blockchain is the way that we can take control back. We can get the corruption out, and we can keep the integrity of the system. Now let's apply it over to banking. When we look at banking, DeFi is already starting to replace the traditional intermediaries. You say, how? And the answer is smart contracts. What is a contract? A contract is an agreement between two individuals. Well, if we can do that all automatically and it can guarantee the other party, the counterparty, does what they say they're going to do, we don't need the intermediary. The technology, the math itself becomes the intermediary and it can run automatically. That's what blockchain does. And so we actually, using this technology that we're referring to as smart contracts, we can replace just huge chunks of the banking system, the intermediaries. Now, I know some people are like, well, that's my job. I don't want to replace my job. Well, if it's not blockchain, it's going to be AI. So don't worry, you're getting replaced. Right? I mean, it's naive to think that we don't want a technology because it's going to replace a job, but moreover, it's going to bring integrity to it. We can use it for trading. Excuse me. I'm so sorry. I felt the sneeze coming. I'm like, I have no idea how to mute this microphone. We can use it for trading. We can use it for lending. We can use it to borrow. We can do all of that with crypto. And it doesn't even have to go through a banking system. It can all be peer-to-peer. We're already seeing it set up. No middlemen, no gatekeepers. We're already seeing it set up where an individual like yourself or like myself can go in, post up as collateral your cryptocurrency and get liquid cash. Liquid money that you can go spend and not spend your Bitcoin, not spend your crypto. What? Yeah. It's already in place. The technology, that's what I keep trying to argue, is the technology is already done. The thing that's holding us back are the people that can't let go of the control. It's not that this isn't it's not a, hey, one day this could happen. It's this is going to happen. The technology is already in place. We just have to push it in. And part of the reason I'm doing this show and I'm doing these live streams every day is to make the argument to society that, hey, we want this. We want this. We want to be part of sovereignty. We want to be part of autonomy, get away from Big Brother. We want to get away from, the centralized banking system and even the centralized government as much as possible, trying to micromanage and control everything. Blockchain makes it possible. And more importantly, it does it with 100% transparency. Now, some people say, well, transparency, doesn't that mean that it's not secure? No, it's 100% secure. They say, well, doesn't it mean there's no privacy? Well, part of that's up to you. You know, nobody's going to know that long string of your wallet address. Nobody's going to know who's on the other side of that. It's not like your name and your address is published with it, but we can see very clearly this wallet transferred whatever the token is to this wallet, and it's confirmed. The ownership moved from person A or from wallet A, wallet address A, to wallet address B. That token moved. Therefore, that tokenized asset moved. Or in the case of banking, therefore, whatever that banking transaction was, moved. All of this stuff is moving from point A to point B. And it's doing it on the blockchain, 100% secure, 100% transparent. Let's look at a third use case. A third use case is cross-border payments. Now you might think, cross-border payments, that doesn't affect me. Oh, but it does. It does, you just don't know it yet. Right now, our money system runs through something called the SWIFT system. SWIFT is unbelievably slow. I couldn't put enough O's on the screen to describe how slow SWIFT is. Now, is it faster than moving, a few tons of gold? Yeah, it's a lot faster than moving a few tons of gold. Moving a few tons of gold is just way impossible, right? I mean, no, you can do it. It takes a ton of resources to do it. So the SWIFT system, it was fine for the last 100 years, but it's not fine for the next 100 years. We need something that's faster. We need something that's more efficient. And if you've not experienced this, if you've never tried to put money onto the blockchain, that's where you start to realize how slow and inefficient our banking system is. Let me help you understand. Our banking system right now, if you go over to, let's say you pull up your banking app on your phone and you punch in some numbers and you're like, hey, I want to move $100 from my account A to my account B, it's going to go just like that. And you're going to be like, oh, look at that. It's instantaneous. It's amazing. Okay, that's intra-bank. It's easy to move money from one account to another account inside the bank. Now let's say that you go to something like PayPal and you use a debit card and PayPal gives you instant access. You're like, oh, wow, it's amazing. PayPal gave me instant access. That's great. Now let's say you use your credit card and PayPal charges you a fee, but they still give you instant access. What you don't realize is behind the scenes, that money didn't clear. They gave you instant access and they put up a facade that tells you the money cleared. But if you then go to try to transfer that money out, you can't because it's locked down for a couple of days because they're letting it all settle. They're letting it all clear. And when you start to move your money onto a blockchain, you start to see this because as you get onto the blockchain, you're getting further and further out of the system. So let me give you a use case where I've run into this recently. Needing to move money from fiat onto a blockchain, get it into USDC, and then transfer that to somebody else. Well, guess what? It's fairly easy to go from your bank over to a place like Coinbase. They get you on the blockchain. It's easy then because Coinbase keeps the facade going. It's easy then to convert it from fiat into USDC on Coinbase. But then if I want to transfer that USDC that I just purchased on Coinbase and transfer it out to a hot wallet or to a cold wallet, they're going to say you can't transfer this yet. Why not? It's being held. Why? We have to settle the funds. What? That's your SWIFT banking system in action. Now, it's one thing to talk about it here in the United States. If you're in Europe, it's one thing to talk about it in Europe or in Canada. It's another thing if you're in El Salvador. You know how long it takes to move money from the United States to El Salvador through the banking system? A little bit longer than you would think, a little bit longer than you would want. And that's for small dollars and cents. What if you were moving millions and millions of dollars? There's all sorts of hurdles. There's all sorts of things that you have to get to, and it takes so much effort to get it there. But when you look at something like XRP, look at something like XLM, boom, it's fast. A matter of seconds, and it's there. Cleared, settled, in the wallet of the person you're sending it to. How many of you have ever known somebody that was a missionary overseas, and maybe your church raised money for them, and then you're trying to send it over to Africa, or you're trying to send it down to South America or wherever. And it takes weeks. Like, it's a lot of work to get that money to these missionaries. And then, of course, Western Union comes along and, hey, mom, hey, dad, send money soon. You remember those commercials from Western Union? And they actually kind of had a facade that worked. There's no facade with blockchain. There's no facade. If you can get to internet activity, if you can get to internet connectability, actually, you don't even have to have that. As long as the person who wants to send you currency in crypto, they have access to the internet. And as long as they have your wallet address, they can send it to you. And then later you can get access to the internet and you've got it. You don't even have to have access to the internet just to receive it. Isn't that amazing? It's on the blockchain and it's secure. And you didn't have to go to the banks and you didn't have to pay all the commissions to the banks. And it's done. And so you can start to see how in a third world country, the idea of instant settlement with minimal fees would serve a community that maybe you and I can't appreciate, but actually there's a lot more of them than there are of us. Because when you look at the global population of 7 billion plus people, at least that's what they say, there's a lot more that are unbanked and underbanked than there are that are in a first world country that's establishing banking. And here's the crazy thing, just like foreign currency, just like Forex, trading, and everything about Forex has always been bigger outside the United States than it is inside the United States, the same is true with crypto. It's the United States that's pulling up the caboose. Now, ironically, we created a lot of the technology, but the society adopting it and understanding it, like we've been really backwards as a society to be able to adapt to and comprehend the benefit of blockchain and crypto. But I'm telling you, it's changing everything and it's transforming it all. And here's 3 use cases that I just gave you. Tokenized real-world assets, replacing the banking system as a whole, and cross-border payments. And I mentioned here just a couple of cryptos, XRP and XLM. For cross-border payments, there's really none better. I mean, that's exactly what they were designed to do. These are kind of sister projects developed by some of the same people. XRP was first. XLM was a secondary project developed by one of the co-founders of XRP, which is Ripple. XLM targeting a little bit more of these third world countries and trying to get them into the first world, helping them have connectability with the world. Okay, so these are just a couple of the use cases that are changing the way people see things. A couple of the things that are, a practical everyday solution to real world problems that couldn't have been solved before we had crypto. Okay, let me know what you think about that. Share it down below. And what I want to do in our last segment today is I want to talk about how we trade in some of these interesting market times that we're dealing with right now. So that's what we're going to cover in our Crypto Alpha section. In an interesting time period. It is a time period of a bearish trend, at least a big pullback. Some people are calling it a bear market. Some people are calling it a crash. I wouldn't put those terms to it. I would just say it's a natural pullback. But what it lends the question to is, when do I start buying? I was on the phone last night with somebody and they were trying to say, well, since it's going down, I should buy. Well, why? I mean, the first thing it does before you lose a bunch of money is goes down. Like, why would you want to be buying while it's falling? We're trying to catch a falling knife. And so the question becomes, when should I start buying? And I want to introduce you to a concept that you're already familiar with if you've been following me, and it's the concept of pivot points. What is a pivot point? A pivot point is simply a support and resistance turning point. That's it. What it tells us is where the traders are making their trading decision. Are we buying or are we selling? And the metaphor that I use oftentimes is like a rest stop on a journey. If you're driving down the interstate and you're driving across the country, you get to a rest stop and you say, you know what, when we get to that spot right there, we're going to stop, we're going to take a potty break, and we're going to decide if we're going to continue this journey, or maybe we're going to, get a hotel and pack it up for the night, or maybe we realize we forgot something, we turn around. But that's where we're going. That's the first spot we're going to. It's like a landmark on the journey. And the same is true for a pivot point or a support and resistance area. What it is it's that price point on the chart where the traders make a decision. Are we going to be buying and pushing the price higher, or are we going to be selling? And there's really nothing you can do about it. You're too small of a player, but there's bigger players that help to establish these pivot points. And then as more and more people start to realize where they are, then the herd mentality kicks in and the pivot points become a bit of a self-fulfilling prophecy. Now, here's the problem. We don't know which way it's going to break. When you look at a pivot point, using our knowledge of trading behavior, we can anticipate that the trade is going to move. We just don't know which way it's going to go. So which way is it going to go? Is it going to move up or is it going to go down? And the answer is you don't know, and frankly, you should not care. You don't know and you shouldn't care. Now, I know all of you are like, why shouldn't I care? This is my money on the line. Well, you should care about that, but you don't really care about what the asset's doing. You care about what you do. And I want you to understand this really clearly. People blame the asset. They blame the stock that didn't move. They blame the crypto that crashed. And they make it the fault of the inanimate asset. And they say, well, if Bitcoin just hadn't sold off, if those stupid traders hadn't been selling Bitcoin, it's BlackRock, it's all their fault. Everybody wants to blame everybody else. It's not about them. It's about you. And what you have to learn to do is to analyze where are we at in this trade and what's the next logical, most probable direction. And the answer is you shouldn't care which one it is. You just need to get the answer. Because then once you have the answer, now you can justify, you can start to build the argument for what you should do. So I use this imagery a lot. It's the imagery of a fish and a boat. Let's say that you have bait on both sides and you got a big old fish in the middle. Question, which way do you want the fish to go? And the answer should be, I really don't care. I genuinely don't care if the fish goes to the left or to the right. I only care that it takes one of my baits and that I catch the dadgum fish. Now, if it's about dinner, maybe everybody agrees. If you got one kid on the front of the boat and one kid on the back of the boat, they're gonna care which way it goes because they got a line in the water. They're biased. They want to catch the fish. But you, if you're an unbiased third party, you don't care. You just say, I just want the fish. Same is true for the market. If this trade breaks to the upside, we want to take the trade to the upside. If it breaks to the downside, that's what we want to do. And you don't care. You only care that it's moving. You shouldn't have a bias. The biggest reason people lose money in the market is because they're biased. They go in and they purchase without actually having good analysis. They're biased now. It has to go up. And then when it doesn't go up, they get angry. Well, it's not the stock's fault. It's not the crypto's fault. It's not Bitcoin's fault. It's your fault. You were reckless. You just jumped in. People go in, they buy XRP at 350, and then they get mad. Why is XRP going down? It wasn't XRP's fault. It was your fault. Own it. Own it and learn to do the analysis. And what we're looking for is we're looking for the trade to go to the next pivot area. Now, when it gets to the next pivot area, the binary question becomes very simple. If it breaks to the upside, I buy. And if it breaks to the downside, I short or I sell, or if I'm not in any position and I don't want to be in a position, I do nothing. That's the decision. It's a very simple binary trading decision at this point. So what happens if this trade breaks to the upside? Where's the next target going to be? You're going to know the answer already. How do I know the answer? Because you've been trading it now. Because now that you've got your eyes on the chart, now that you've identified your pivot points, it's easy. We're going to trade from one pivot point to the next. So when we get to that congestion area at this support, like you see here, I'm not buying just because I hit support. I might pick up a little bit. But that's not how I make my trading decisions. I make my trading decisions when we hit support and when we bounce. So as we bounce and we start to trade higher, now I'm in a bullish trade. And now you say, where's this trade going? I look to the left. And we're going to find the most recent pivot point, and that becomes my next target. Now, what happens if the trade breaks to the downside? If the trade breaks to the downside, it's the opposite. If the trade breaks to the downside, if I'm not in the trade and I want to trade short, then I place a short trade. If I don't want to trade short, I do nothing. And in the world of crypto, generally, we're not shorting crypto. Okay, now outside of the United States, if any of you are watching from outside the United States and you have access to perpetual futures, many of you may be doing short trades on crypto. And that's great. I don't have a dog in the fight. I'm totally great with that. We do that with stocks and options all the time. But in the United States, in crypto, it's kind of hard because they haven't got the regulation worked out to say it's okay. That's the bottom line. Okay. So most people in the United States, if you're trading crypto, you're not shorting it, which means if it drops, you do nothing. If it drops, you do nothing. But if you can take a bearish trade, then you say, well, where's my next target? And the answer is my previous support level. And you say, well, where's my stop? How do I know when this trade has gone against me? And the answer is, it's the opposite side of your bracket. It's the opposite side of your bracket. If you got into the bullish trade where you would have gotten into a bearish trade, that's your stop. That's where you know the trade is no longer going in your favor. So you stop out. If you got into a bearish trade where you would have put a bullish trade, that's where your stop is for the bearish trade. You say, that's where I know it's no longer going in my favor. Now, some of you are listening, like, you don't just hold it? No, I don't just hold it. Why? You think I want to go down with this ship? I don't want to go down with this ship. I am not emotionally invested in any of these cryptos. There's one crypto that I'm emotionally invested in, and it's none of these that you know. Actually, there's two, because I actually have legitimate ownership in the projects. But it's none of these that you're looking at. It's not Bitcoin. It's not Solana. It's not Ethereum. I don't care what happens to those cryptos. I genuinely don't. All I care about is that I'm on the right side of the trade. And if I'm on the right side of the trade, I'm going to make money, and that's all I care about. And frankly, it's all you should care about. That's all any of you should care about. The fallacy is to believe that if I buy Bitcoin, I'm going to be okay forever. Whoever sold you that lie didn't tell you the truth. Bitcoin is volatile. Crypto is volatile. There's going to be rides up and there's going to be rides down. That is the reality of it. Whoever told you if you just buy Nvidia, if you just buy Netflix, if you just buy Palantir, you're going to be fine in the stock market. They did not tell you the truth. The truth is all assets have volatility. And it's that volatility that actually gives you the opportunity to make profits and actually win. Don't hate the hand that feeds you when it slaps you. I just came up with that, right? Yeah, you know, people, they get so mad because the volatility is beating them up, but when it's feeding them, they don't get upset. Get out of the way of the hand. Get out of the way of the volatility. Learn to maneuver in and out of your trades. And when you do that, you'll realize that you're prepared for any trading setup. You'll be prepared for any asset that you're trading. The idea of trading is not complicated. I mean, people who know how to trade, we don't think it's weird. We don't think it's complicated. We don't think it's scary. The people who think it's scary, I don't think they know how to trade. But the people that you hear reporting on it on the news, most of them are journalists. They're not traders, and they're not really investors. They might have exposure, but having exposure to the market doesn't make you a trader. Having exposure to the market just means that you put some money in there and you gambled. You hoped it did well. Don't do that. Learn how the market works. And I just taught you a core concept of how to determine where the trade's going, when to get into the trade. Let's take this into the real world, okay? So right now I'm giving you kind of some theory. Let's take this into the real world. Let's come over here to, why are we disconnected? Come over here to Bitcoin. Why Bitcoin? Because that's the one we talk about all the time. Until today, Bitcoin was setting up at a pivot area. Now today, based on where we are, I would actually say if you want to short Bitcoin, this is pretty much your signal. Okay, but before that, if we could have looked at this yesterday, I would have said if we break above this price point, it's probably time to start buying Bitcoin. And if we break below, I would have used yesterday's low, it's time to start shorting. And there's my bracket. Now it's a binary decision. If Bitcoin breaks to the upside, boom, we're jumping in. Where's our next targets? 1, 2, and then here's going to be your big one right here. If it breaks to the downside, where's my targets? Well, there are none. We have to look to the left, right? Because it's not on the chart. Or it is on the chart, just not where I was at. So once we look to the left, you say, okay, well, there's some resistance right in here, but this was a major pivot right here. So if we break to the downside, and that's how I came up with this 75,000 number, because that's where that pivot point is. I'm not hating on Bitcoin to say, oh, it's at 88, almost 89, and I think it might be at 75 by this time next week. I'm not hating on Bitcoin. I'm just reading the chart, and I'm just telling you where the momentum is taking it. And I'm doing it very dissociated from a personal opinion because I actually don't care. I legit don't care which way it goes because I'm not in this trade right now. I'm waiting for the trade to set up. Now, I'm biased in the sense that I sure would like for it to set up right here. And I sure would like to have a great buying opportunity right here. But I'm not in the trade. I don't care. I don't care yet. Make sense? And the way that I can do that is to learn how to look at the price action, look at the pivot points, and say, when we get there, I'm waiting for it to move one way or the other. Just like the fish under the boat. I don't care which way the fish moves. I just want the fish on my line. And that's what I have to share with you today on how you trade through pivot points. All right. Hope you've got a lot out of that. If you did and you want to learn more, check me out over at trademaestro.com. Feel free to send me an email, jeremy@trademaestro.com. Leave me comments here. If you haven't done so already, like and subscribe to the channel. On Rumble, we are at Trade Maestro. On YouTube, we are at Trade Maestro. If we're over on Telegram, check out Real Trade Maestro. And on Facebook, it's Trade Maestro Official. That's where you can find us all the time. I will be back tomorrow, same time, same place, same web addresses, same content. If you got something you want me to talk about, let me know. Share it in the comments. Share it in the comments, and we'll see if we can work it into the content. And that's all I got for you today. Thank you for being here. I wish you the best. Hope you have a wonderful day. Happy trading to all of you. We'll talk to you soon.